the demand for US dollar-based stablecoins in the US is actually probably pretty low. Like we have Venmo, we have Cash App, we have brokerage accounts. Like we just don't have as much demand for having a US denominated stablecoin. On the flip side, Tether is basically rest of world for US dollar-based stablecoins.
Yeah, huge market.
That is where all the demand is going to come from.
This episode is brought to you by Arkham. Arkham allows crypto traders and investors to look inside the wallets of the best traders, largest funds, and most influential players in the crypto markets today. We'll hear more about Arkham later in today's episode. Hey everyone, quick disclaimer before we get into today's episode. Nothing said on Bell Curve is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely our opinions, not financial advice. Our guests and I may hold positions in the companies, funds, or projects discussed. All right, everyone, welcome back to another Bell Curve Roundup. You got Michael's 1 and 2, Vance, fellas. How we doing?
We're back.
We're back. Yeah.
Physically, not the markets. Physically.
We're back physically. Yeah, doing well. Just hanging in there, being cool, like Trump advised us to.
He did. He absolutely bottom ticked. I love the people that
also,
were.
I called exactly what was going to happen. You know, I basically said he was going to put tariffs on, then he was going to take them off. People were like, "How is he going to take them off?" And it's like, this is Trump's negotiating style. Like immediately starts taking hostages, kills one of them, and then threatens everybody else, and then releases all the hostages, and everyone's good. But I thought the Wall Street
and then you forgot the most important part. Then he says, "I saved everyone."
Right. And the one hostage that died, well, somebody else killed him. But I mean, I thought there was this Wall Street Journal article that kind of detailed the inner workings of his pivot, and he was just like, "Yeah, I was watching the markets, and it seemed like the bond market got queasy, and so I pulled back, and now it's 10% tariffs on every country. The reciprocal ones have been delayed." And then I think the end state of all of this is they negotiate bilateral trade agreements like the US, Canada, Mexico one. And then there's certain goods that fall inside of that. Basically, like 90% of goods fall inside the USMCA, which is the trade agreement between the US, Canada, and Mexico. And then anything outside of that has this 10% tariff, which is like...
Well, there's another really big...
Basically status quo.
There's another really big wrinkle, which is that China still has 125% tariffs. They did not get the pause, and also Canada and Mexico still have 25%. So it's basically
no, that's not right. Anything that's under the USMCA is not tariffed, which is like 90% of goods. Anything that's outside of that is 25%.
That's the North America Free Trade Agreement. Is that what you're referring to there?
Yeah, it's like the U.S. Mexico Canada agreement or something. But everything under that agreement is, so that's like all agricultural products, like a lot of finished goods, but it's most of the trade that happens between the countries is covered under that, and then anything that's outside of it is 25%.
My favorite part about this was the broader world becoming aware of Cointelegraph intern phenomena. It was a really analogous situation, right? Where there was this leak about the 90-day pause, the market shot up, but then it didn't really go down. They realized they were offsides, and then actually it ended up being confirmed. And I think the S&P went up 9% in one day. And it just, everyone on crypto Twitter was like, Cointelegraph intern. I actually had a couple of phone calls explaining that to some friends who had never heard of that, but I thought that was kind of my favorite part and analog to this whole saga. But
when mainstream media starts understanding the crypto Twitterverse, that's when we know we've made it.
Yeah, actually, one of my favorite tweets on this was that we thought we were going to go mainstream, but we just pulled everyone down to our level.
Exactly,
which is pretty funny. But yeah, what do you guys make of all of this? I mean, in terms of markets for the rest of the year, I guess we're really just, it's all dependent on Trump here. A couple of the forward guidance guys, Felix and Quinn, who I gotta give them credit. I mean, I listen along every week. They've been really good. They got really bearish January, and then Felix posted publicly, but bought basically 2 days ago, right before this. They've done very well, but they're starting to look at just some troubles in the bond market in general, and starting to flag that the Fed might need to step in here sometime soon. And it
Well, I
seems like
mean, no, just to dovetail on that, I mean, look at the 10-year rate, and that kind of describes everything that's going on, which is,
yeah,
the the announcement of all of this dropped the 10-year below 4. And then right as everything, it looked like there was some distressed seller. Maybe it was one of the pod shops. Maybe it was a country. Like, I've heard rumors that it was a pod shop. I've heard rumors that it was Japan. I've even heard that it was China that was basically selling anything, U.S. Treasury related, driving yields up. It went up to 4.48% was the highest I saw.
mm-hmm.
And it's still at 4.4%. And so obviously dropped yesterday. Now it's back up. I think the 10-year is probably going to be some indication as to what we're going to be looking for like the short duration market moves, and you'll probably see, if things ease a little bit, you'll see the 10-year drop. But I would imagine that, I guess the next meeting is May 6th or May 7th for FOMC. Chances of a cut, at least yesterday, were 50% plus. I don't know if they cut there or if they wait till June, but June, July, August, or June, July, I guess August, there's no meeting. May, June, July are kind of the three options to see if they put cuts back on the table. And today we also saw CPI slightly lower than expected, but still at, headline 2.4%, whereas we expected 2.5%. It'll be interesting to see kind of the next couple of data points in terms of CPI as well. We won't get another one before the FOMC, so it's hard to say whether or not inflation will be low enough for them to have justification to cut, which is probably one of the reasons why things are selling off a bit today. Recording this on the 10th.
Yep.
It's going to be, I think it's going to be like pretty volatile for the next few weeks, and maybe even depending on what happens, like July, when the 90-day pause is up, you're going to see a lot more volatility because everyone's going to be expecting there to be stuff happening. And pauses are pauses, right? It's not like it's gone forever. It just extends at 90 days. But all that being said, I think, and there's been at least some things that I've seen so far of rumors of trade deals being negotiated and potentially finalized in the next couple of weeks. So maybe that'll be positive. It's all closed door negotiations at this point.
So I'm curious what you guys think about this idea of separating Main Street from Wall Street here, and the ability for the administration to isolate the impacts of a stock market crash from Main Street. I talked to a buddy of mine who runs he's been running an HVAC roll up, or he's like the point guy for deals. He personally did 50 HVAC deals last year. So he basically spends his entire week flying out to and courting and getting drinks with and basically trying to convince HVAC guys to sell their businesses. And these are like, $2 million to $5 million EBITDA businesses, like very kind of like, they're basically vast majority Trump. And I was like, what is the sentiment like on the ground? So one thing that I hadn't necessarily thought of, or just connected the dots necessarily, is that there's been a huge pull forward in demand for services, right? So what's actually, and you saw there, people maybe saw reports that there were like record iPhone sales last weekend when all of these were announced. But you're seeing the same thing with HVAC, right? And most HVAC stuff is made in Mexico. And so the two effects here are, if let's say the half-life of your average HVAC setup is 7 years, you've got 2 years left, all the techs are getting on the phone and saying, hey, we got 2 years left, like you might as well do that. And it's been actually received very positively. There's probably going to be a whipsaw effect like there is whenever you pull demand forward. And it's better for the big guys than the small guys, depending on the extent to which these tariffs end up sticking, because the small guys are just not built to absorb that type of cost, where there'll probably be consolidation at the top end of the market, right? If you have a more sophisticated operation, you can absorb that. So it's kind of mixed on the ground. I think it's actually positive in the moment. It's unlike, I don't know what the long-term ability to sustain that would be.
I mean, another anecdote, one of our LPs is a fund of funds, and they were telling us that one of their investors is the family office of a large consumer product business that most people would probably know the name of. I won't mention, but think of it as like a true like consumer product, household durable item. And they source all their materials from Asia. They manufacture everything in the United States, and their largest trading venue is Europe. And obviously they sell in the US as well, but they're getting hit with material increases for their inputs of, coming from China are going to be 125%. So it doubles their cost, which already puts them at net gross profit negative. And then if they're going to sell the reciprocal tariffs to places like Europe or other countries, if they were to implement reciprocal, would increase it again. And the conversation was basically, well, I guess we got to shut this company down. And it's a very large company. And I would imagine that is probably happening 1,000 times over in conversations right now across the US. And this is a US company, US founding family, and US manufactured product. But input costs just went up 125%.
Yeah. It seems like the strategy here was to build the coalition to negotiate with China. And it seems like China was the focus of this trade deal all along. So, yeah, I guess we have to wait to see if there's going to be a deal that's made. I'm not sure. It seems like the stakes are relatively high for both countries. And it does seem like maybe the benefits of how tightly the US has been coupled to China for this long is maybe it's like run its course a little bit, or there needs to be some decoupling that would be beneficial for both parties. It's just how do you do that? How do you posture it? And who gets the better deal on the way out? I don't know. That's the tough part. Right?
I mean, the other persistent rumor is that, Scott Besson said that if you're allocating to Chinese stocks, like you're on notice because we might delist. I think there's like almost $1.5 trillion of Chinese or U.S. listed Chinese stocks. And could you imagine like that happening? When Russia closed itself up, I think there was like maybe 500 billion lost just trapped in that market. But like, it's just putting China in kind of a corner, and I think that those tariffs will be the longest pole to be negotiated, and it probably happens in phases where it's like, okay, you give us TikTok, you're down to 50%. You give us a bilateral trade agreement, you're down to 20%. Like it'll take a long time for China. And I think yesterday was the day where it was like, we're not going into a depression. Today is clearly the day where people are saying bond yields are still really high. To Michael's point, 10 years at 4.4. And there's probably going to be some knock-on effects from these tariffs, but it significantly reduced the chances of like a global recession. And Trump, even in the comments publicly and also in the Wall Street Journal, he said, we're not looking to hurt anybody. It's like a very friendly version of Trump. But I think like the bull case for Trump is like he's capable of changing his mind and he's actively watching things. And that, there's both the Trump put, which is like 5,000 S&P, which is basically where we are today. And then there's also kind of like the Trump call, where it's just like if all the policies work, the deficit should go down and yield should go down and all that stuff. I think right now Scott Besson is probably more oriented towards the Trump call. He's like secured the Trump put by going down to Mar-a-Lago and telling Peter Navarro to go fuck himself. And now I think it's kind of like how do you secure the Trump call? And that's more like mechanical. It's like making positive change, things like the supplementary leverage ratio, opening up places like Wells Fargo to buy treasuries. But I personally think the market is just watching the 10-year, and it's creeping up to 4 or 5 now. So that's a bit scary.
Yeah. I think the relative shift within the administration and sort of who's going up and speaking on behalf of the administration probably tells you a lot right now.
Yeah.
You don't see Lutnick and you don't see Navarro. It's all Besson.
Arkham was created to make blockchains human readable and simplify blockchain data so that it is meaningful and useful to the average crypto user. With their new exchange, users can see what the top traders are buying and selling with Arkham Intel, and then trade on that information with Arkham Exchange. To get started, follow the link in the show notes below. This episode is brought to you by Marinade. Marinade is a high-performance staking delegation platform that brings both liquidity and security to the Solana network by connecting SOL holders with the best staking rates on Solana. Follow the link in today's show notes to learn more.
Beston's great, man. He's awesome. I've listened to a bunch of his interviews. Speaks really well. Clearly, a very intelligent guy. I like to see that he's got his hand on the stick. Makes me feel. Yep. You know what? One thing that I'm curious to get your guys' opinion. I hadn't really thought about it in these terms, but it does relatively make sense here, right? Which is, so U.S. issuer of the world reserve currency, people want to hold our currency, preferably in debt form, right? So it's yield-bearing currency. The way that they get that is they run a surplus against us, right? So if the campaign here is to materially reduce the deficit, then there's going to be less. It would actually make sense to me that there's less of a bid for our debt, right? Marginally, not like a ton less, but on the margins. If you reverse that process of us having a large deficit, that's what happens, right? So what is I think this is the reason why Scott Besson is so excited about stablecoins, because he views that as that's going to fill the hole. So I don't know. I know everyone's all bullish on stablecoins. I've heard us talk about stablecoins for 4 podcasts in a row, but I still don't think people are bullish enough on them. I mean, I think it's crazy.
There's a difference between bullish and bullish enough.
I also think, like, if you think about the mechanics of a trade deficit, we give them our dollars to buy their products, so they have a bunch of dollars, and then they take those dollars and then they go off and buy treasuries with them. So, like, mechanically, it's like we sell dollars to them, and then they sell dollars to buy treasuries. Like, usually the 10-year and yields in general move with the dollar in terms of its strength. I think potentially what you're seeing right now is like the first time ever where it's like the dollar gets a lot weaker and then yields get a lot higher. That's a different type of scenario.
You know what else I was thinking about is...
And also the dollar weakness should offset some of the yields increasing.
Yeah.
The other
weaker and the funding costs are higher, like maybe your net kind of the same.
So the other thing I think is maybe fair to call out, Vance and I were kind of talking about this and then also reading about it on Zero Hedge, just the amount of leverage in the basis trade that these pod shops are running is an absolute gargantuan number.
We should get someone from that world on this podcast to talk about that.
The idea that a single pod shop has 2 trillion of basis.
No, that's all 6 of them.
All 6 of them? Okay, fine. Six of them have 2 trillion with 11x leverage. And that's the basis trade that they're running. That's a lot. That's our GDP. That's 2/3 of our GDP.
You know what that feels like? You know that phrase, you owe the bank 1 million, it's your problem. If you owe the bank 100 million, it's the bank's problem. That's sort of what it feels like.
Yes and no, but like the way that they unwind this is what's going on right now. They sell treasuries because they need liquidity.
Yeah.
And so yields go up.
Yeah.
Is it Japan selling, or is it, I don't know, enter pod shop name?
Mm-hmm. You know what I would love to know is when the 10-year started to creep up, everyone said this is China selling. Or not everyone. There was a lot of people were saying that.
That was a rumor, and then someone said it's Japan because they need liquidity. Like,
someone blew up, yeah.
Also, like if China's trying to weaken their currency, which they have been to offset these tariffs, like if you sell treasuries, that does the opposite of that.
Right. Yeah. So I just wonder. Yeah, it just feels like that might not actually be a strategy that countries use. Maybe they do.
And then Chamath is like, we should delay next week's 10-year auction because like this is what I think. It's like, did you even like think about?
No, illogical.
Chamath's taken some beatings on the old Twitter.
It does suck when you have bad takes.
Yeah, I mean, I haven't loved some of those takes either, so I'm a little sympathetic with the poking fun. It's like, come on, dude. But I don't know. We should get someone though that is actually running one of those, like someone from one of these big pod shops, like a Millennium or something like that. on the podcast. But you know what? The other thing too, just to close on stablecoins is, and I'd actually love to get your guys' predictions if you have them for what you think the total market cap of stablecoins would be like a 2 to 3 year time horizon. Because I think it's around 250, between 230 and 250 right now.
Look, a trillion is in sight.
Yeah, that's my sense too. But one thing also that if you think about, because there's kind of the dollar for the market for domestic dollars, but then there's a much larger market for euro dollars, which is it's not regulated and people don't have clear statistics about it, but it could be anywhere, could be an order of magnitude larger. And it's just, if you think about, there's an enormous amount of demand in the world for dollars. Some amount of dollars make it out of the USL1, right, into offshore, financial centers, and then they, write loans, right? They create dollar denominated, instruments on top of that to fund. This is how some construction project between Russia and China might end up getting funded. So the U.S. has no insight into that whatsoever. It's actually kind of a better construction if you think of Tether or some of these offshore stablecoins as a replacement for euro dollars. Like, U.S. has direct connection to Tether, right? Like the FBI, we know the FBI works with Tether. Actually, it might be advantageous from the position of national security, which Scott Bessent said he apparently spends 50% of his time on, to have Tether instead of this like large, opaque, unregulated market that everyone has to just guess at.
Well, I mean, just think about it from a strategic perspective as well. You've got USDC, which is heavily denominated or predominated in the US, which there's not going to be as much demand. I mean, if you think about it, for US dollar-based stablecoins, there's definitely going to be demand. And I know we talked about Circle 1 or 2 pods ago, but
I think it was just 1 pod ago.
Wow.
And they've delayed, I think, their IPO since we spoke.
It has been a week. Let's put it that way.
As well as Klarna and
IPO window is shut for sure.
Yeah.
But at least for the time being, but the demand for US dollar-based stablecoins in the US is actually probably pretty low. Like, we have Venmo, we have Cash App, we have brokerage accounts. Like, we just don't have as much demand for having a US denominated stablecoin. On the flip side, Tether is basically rest of world for US dollar-based stablecoins.
Yeah, huge market.
That is where all the demand is going to come from. Tether's at, I think, 144, 145 out of the 230, 240. That, growth, let's say we go from 240 to a trillion, I think that proportion probably increases from demand for USDT as opposed to USDC. And so whatever that proportion is right now, let's say that it actually closes the gap in terms of the proportion that everybody else has. Tether increases its market share of the stablecoin market. We're basically using, Tether as an exporter of treasuries and US dollar to rest of world countries that want to use US dollar for payment or holding or currency, whatever, the use case may be. That is the strategic imperative of who's going to be the net buyer of treasuries to offset, demand differences from trade deficits.
It's a really interesting time to be alive, to be honest. I mean, this if that's a massive market that you never really thought Tether, it's like, who's going to attack that market? But maybe Tether wins. I don't know.
I mean, so like, especially with these Chinese stocks getting delisted, also just like imagine what David Tepper, he gets really angry. He's like this famous hedge fund guy that's very long China. Sure, he's just like punching the air right now. But I think, like, to a certain extent, like, crypto is the last truly global market. And like stablecoins are obviously like a wrinkle of that, where you're exporting a currency globally. But, like, if this is really what happens, and people in China can't buy US stocks, and it's soon to be vice versa, it looks like crypto is really going to be the last global market. And that just gives it like people talk about like the benefits of decentralization and like, all that stuff in a very theoretical term, but like when it actually makes you the last global market, it's extraordinarily valuable.
What is your guys' read? I have conflicting views about this because obviously I'm an American. I want America to win, and I'm going to live in America for my life. But it does,
as he calls in from Canada.
I know, dude. Okay, but what do you guys think about what this does? Some of this trade war posturing does for us on the global stage here. And, you know, people, especially in crypto, I think rightly pointed out that when we seized that or froze that $400 billion worth of collateral from the Russian central bank, that undermines confidence, right? The value proposition of US capital markets is that we won't do stuff like that. So if we were to do something like delist Chinese stocks, you're kind of slowly chipping away at trust and the advantage of being this neutral platform. I mean, that's at least, I can see that long term, right? I can at least, that's not a preposterous story to me. And I think crypto wins in that scenario, right? Like, I think one of the challenges for decentralization in crypto has been, well, there's this really pretty trustworthy, right? Like very liquid capital markets here in the US. Do we really need it to be super decentralized and have all this technical risk and yada, yada, when we have a good enough solution here?
I think what it really comes down to is are philosophically, are you aligned with us, and are you a friend to the United States?
Mm-hmm.
If yes, you get our demand and you get our financial markets.
Mm-hmm.
That's what it comes down to. If you are going to be limiting, like, remember, all the companies like TikTok operate in the US, and that's one of the reasons why TikTok is so valuable. Google does not, Facebook does not. None of the major equivalent companies operate within China.
I'm surprised that, why has that been allowed? I don't understand that.
This is the crux of the issue. This is exactly what I think is going to be part of the negotiations. Why are we limited from not operating those companies and U.S. companies, which build U.S. shareholder value in one of the largest markets, if not the largest market in the world? Why is that not allowed? But they can operate here? That feels imbalanced.
That does feel imbalanced.
And like most of the volume in international stock markets originates from America. Like the domestic pool of buyers, sellers, hedge funds, market makers in like a country like Brazil is extraordinarily small. And so not only do we have our own capital markets, but like we export capital to other markets as well. And I think it's a great move to delist these Chinese stocks. Like the job of the CCP to keep their stock, and like you kind of see this yesterday where it was like the Chinese stock market was up while we were down, and then we were way up and they were down. It is like kind of like a competition to see who can pump their stock market more. And it's going to get extraordinarily hard if you're unable to list Chinese stocks in the U.S. Like one of the things I was thinking about, when it was looking like Trump's brains got replaced with Peter Navarro's, was like, should I go off and buy a bunch of Alibaba in like the PA, obviously, but like, should I go buy a bunch of Chinese stocks in case like we really start to unravel here? I mean, how can you even think about doing that today? And like, that will result in multiple compression, which will result in fewer IPOs in China, which will result in less valuable companies, which will result in less access to capital. And in an age where like, we're spending hundreds of billions of dollars in data centers, like, you're putting them meaningfully behind in places like AI or robotics.
Have you guys read this piece? I think it was written by some XAI or OpenAI employees, AI by 2027.
Yep.
That was a bit of a disturbing piece. I'm not going to lie. Yeah, that disturbed me. that was pretty crazy.
We talked about this internally actually today, but I think there's an expectation that we get to a lot of those points, but the timelines are probably a little bit longer.
Yeah.
Overestimate what happens in the next 2 years, underestimate what happens in the next 5 years.
Yeah, I agree. It'll be a big challenge for governments what to do around this. I mean,
totally.
I will say it's impacting how we're thinking also about. I mean, it's already gotten to the point where, it impacts headcount and planning, and it matters. It's already having an impact, I would say.
Well, and so this is where I think it gets to be really important what happens over the next 30, 60, 90 days. Because over 90 days, like it's great that we pause for 90, but if it's really 90 and we're at basically a standstill for a full 90 days, that impacts businesses' investment decisions. That impacts hiring plans, that impacts buying materials because you don't know if you're going to be able to, sell them.
It does, yeah.
Like that will start to have a ripple effect through the entire economy that I think could have much broader implications than just the stock market sell-off that we've seen so far.
And the impact extends outside of even, if you're a manufacturing business that's, China's in your supply chain, it impacts us. Like if tariff fears tank the market and Bitcoin goes down 25%, that impacts us. That impacts everyone in crypto, because then alts sell off 50% and everyone's treasury is denominated in alts and people get spooked. I mean, this stuff, it trickles down to every single part of the economy, whether or not you're directly impacted by
yes, we are probably the furthest removed from, trade tariffs as an industry. We're also extremely small. So, us being impacted doesn't really move the economic needle.
No, it doesn't.
But it is a canary in the coal mine for what's happening for industries that are more directly impacted by tariffs.
Yeah, sorry, that's the point I was trying to make. Exactly. Yeah. So, but that makes me think that they'll do something to resolve this. I don't really think
it's not going to take 90 days is my point. There's going to be intermediate steps and improvements and plans made, and 90 days is just air cover for negotiations.
The last thing I would say on this is like the depth of your capital markets is extraordinarily important at a time where we're building AI, robotics, trying to reshore, trying to reindustrialize, rebuild the military. And like you can't afford to have like the supply chain of capital gum up, and like there's an AI company in China. It's kind of like the main DeepSeek rival. I think it's called like Mensis or something. I might have gotten the name wrong.
Mantis, maybe. Mantis.
Mantis, and they went out to raise, and it got reported in Bloomberg. And they're raising at a $500 million valuation. Like OpenAI just raised at $350 billion.
That's
crazy. What Vance the quote? Mira went out to go raise 1 on 4, and she got 2 on 10.
Yeah, the one of the OpenAI co-founders, board members, whatever. How deep your capital markets are really, really matters right now, and it feels like U.S. allies will be granted some fraction of that, and then having the whole world pump your market is one thing, but like if you're China trying to defend yours, it's like entirely another. And I mean, you're either kind of like in US stock markets now, or you're in something decentralized like crypto or gold or uranium, or stablecoins. But like, I don't really see a viable option to allocate to the Chinese stock market if you're an investor today, and that really hurts them.
Their bonds are getting smacked at the moment too. So it's I also think that even as bullish as people are, I mean, I don't know if you guys saw Sam Altman tweeted out something, we had one of the best, launches of all time or something, or maybe it was their CPO. We got 1 million, users in the first week, and we just got 1 million users in the last hour. And I will say, just in terms of how we're thinking about this as Blockworks as well, as subs for people, I think the growth is actually, the growth is just starting here. I think it's very real, super useful. It's a huge deal. It's a really interesting thing to be living through. So I don't know. I agree with you that I think it's a huge opportunity it's definitely a massive advantage that the US has here as well. I listened to Brad Gerstner describe the OpenAI raise as a private IPO, because the 30 billion or 40 billion, I think they raised, there's a tranche, there's $10 billion tranche, and then the 30 they're getting presumably after some milestones or something. But
the milestone is turning the company to a for-profit.
The milestone is AGI has been achieved internally.
I mean, I don't know the ins and outs of the lawsuit. It's going to be really interesting to see. But when you start a company as a nonprofit and somehow expect to take it public as a for-profit entity, that feels disingenuous.
It does, for sure. I don't think anyone thinks it. Actually, one of Elon's funnier trolls.
What am I missing here?
If they call it closed AI,
and it's venture capital. I can get tax write-offs for early stage investing.
Over the years, we have seen a multitude of hacks, rugs, and bundled launches. The number one way that crypto traders can protect themselves and the wider community is through on-chain analysis, knowing who is moving funds and where those funds are going. Paired with their new exchange, users can see what the top traders are buying and selling with Arkham Intel, and then trade on that information with Arkham Exchange. Arkham's Exchange provides traders with the tooling and liquidity to take action in crypto markets based upon their on-chain observations, bringing them the world's first exchange powered by crypto intelligence. To To get started, follow the link in the show notes below. Hey everyone, quick shout out to today's sponsor, Marinade. Since launching in 2021, Marinade has expanded their suite of products to provide solutions for both DeFi users and TradFi, including liquid and native staking, as well as direct enterprise integrations. Marinade's platform is optimized for institutions to securely expand their exposure to Solana. Whether through the provisioning of custodial or non-custodial yield, integrating staking rewards into Solana financial products, or leveraging Marinade's best-in-market rewards rate for revenue and treasury management. Whether you're in DeFi, TradFi, or somewhere in between, Marinade has something for you. To learn more about Marinade, follow the link in today's show notes.
I've got a question for you guys. I have a buddy, Miles, who's sometimes come on the show, has flagged to me this. He's been diving a little bit deeper into commercial open source as a strategy, and I was listening to Bill Gurley describe some of the strategy of like Llama within like open sourcing different parts of like what was the strategy of open sourcing Llama and their the weights there, and times where companies will use open source either offensively like that or defensively. Like Amazon had a private solution for what was essentially Kubernetes, and so Google wanted to commoditize what would have otherwise been a huge win for Amazon. So they released it open source and kind of got everyone onto that platform. So it just kind of made me think that in crypto, maybe these conversations are happening behind closed doors, but it doesn't feel like we're that sophisticated. It's kind of just, it should all be open source. And, if you don't do that, you're against the ethos and there's social shaming. But there's actually a lot of advanced strategy around this and different business models which leverage open source in general. I'd be curious, I'm sure you guys are probably privy to some of these conversations if they're happening. How sophisticated do you think from a strategy perspective we are about open source in general?
All the Solana stuff is closed source.
It is, yeah.
So I feel like it's
pretty
really
legit knock, I think, on the ecosystem.
I think it's, I forget whose is, I guess maybe like Phantom or something, maybe a few other protocols, maybe like the Pump wallet, but it can be an advantage. It can be a disadvantage. I think mostly it comes to security when I think about open source and making sure it's battle tested, because it's live fire exercises in crypto. And, if you have a security bug, that means your users lose money. The open source nature of a project can be very, very important. And so I think the open source nature of the AI stuff is much different, where it's a lot of it is public, there's APIs you can call, but the specific model weights are what are the closely guarded secrets. That and where you get your data from. Where'd you get the Ghibli data from?
Yeah.
Ghibli? It's but he's just wearing people down on the data side such that they don't have a defense. But I think it's more strategic to avoiding regulatory capture, business model erosion, or just copyright violation for AI versus crypto.
Yep. How sophisticated are we? I would say not very. In terms of strategy of what's open versus closed. Look, I think that there is a model that makes sense where you have certain aspects that are closed because it's proprietary, where the rest of it is open. The reason why you want something to be open is because that's going to be the interface for both consumers and developers that would ostensibly be building on your platform. If it's open for developers, you want that to be the case because that is how you have business development. That's how you build a community. That's how people can build on top of you. But if you have something, in AI, it's to Vance's point, literally the engineers at Azure and GCP who are the ones that have the computers that touch the model weights are air-gapped organizationally from the rest of GCP and Azure. There's no interaction. That is the lock and key 24/7 armed guard security model that they have for the model weights. Obviously, we don't have a similar thing in crypto, but the idea that everything's just open and free and let's take it and go, I think is not as sophisticated as it could be. There could be aspects that are important to keep proprietary.
And I think it's already, if you look at it, it's already starting to diverge. Optimism versus Arbitrum is a decent example of this, where Optimism has been MIT open source since day one. And actually it's something that they've used to criticize Arbitrum, which is not necessarily, there's a business source license. I can't remember which one, but the difference is that you basically have to pay a little bit for licensing in Arbitrum, but then once you pay that license, you can do anything with it.
Whereas optimism is actually moving the other way. And the trade-off of that is you're in the OP stack now. And so like a salient example of this is they denigrated the ability to use your own token for gas, right? So if you're in the super chain, you're using ETH, and they're going to, because that's the way that they have to generate value accrual, right?
And it's still the case, I believe, that 15% of your revenue goes to optimism.
Yeah, it's 50. Did you say 15 or 50?
15.
Yeah, 15.
1.5.
1.5. Yep. Yeah. Right. So, yeah, it's that's what makes me think these discussions must be being had at some point. But
I think there's a historical precedent of fully open source, fully decentralized, to therefore become basically a non-security. And if you aren't that, there's potential risk that you would be declared a security because of centralization concerns. Is that still the case? We need market structure bill to be able to tell us, frankly. And what is decentralized, what is not decentralized, what is a security, what is not a security. Once we have answers to that, I think we're going to start to get a lot more sophisticated in terms of the business models around how you can operate within the confines of that framework.
Have you guys heard any rumblings about the market structure bill?
Stablecoins is the only thing that's working its way through right now.
Okay, so Coinbase put out an X article, essentially asking the powers that be to reconsider this provision in the stablecoin bill, which would prevent them from sharing yield back to users, and it got shut down. French Hill shut it down. So I know we talked. Yeah.
Coinbase wants to keep that $1 billion. Well, I guess actually, so they would keep the $1 billion, but you wouldn't be able to earn yield. So I think that this is directly affecting that 3.9% or however much you get right now to have USDC on Coinbase. So remember, I think this was actually maybe this is one. Once again, it's been this week. It's felt like a month. I think we talked about how that 3.9% that you get on Coinbase may be yield in the same way that the bill is drafted, which does call into question whether or not that will persist, and then calls into question whether growth for USDC will persist.
Well, also, I'm not sure. Coinbase is in a little
very bearish for Circle, because Circle passes back a lot of the yield on a lot of stable coins.
Well, yeah. So this is the question: is this directly affecting that capability? And if yes, tough. If no, maybe it's okay.
Okay, so here is how will it be treated within? So if you go onto Coinbase right now and you deposit USDC, you're getting 4% or something like that.
3.9%, yeah.
Yeah, and I'm pretty sure that gets bucketed into sales and marketing expense. It's like customer acquisition cost.
Mm-hmm.
Yep.
So isn't that the same?
If you pass it back, here's the other thing, Coinbase owns Circle. So if you pass back yield to yourself, does that count?
I don't think Coinbase owns Circle anymore.
Yeah, they do.
Actually, Circle repurchased that equity, I think. Yeah,
really?
I think that was a detail in there.
The partnership they have with Coinbase takes about 60% of their top line.
It's more than half, yeah. Mm-hmm.
So maybe they need to repurchase that for that to really work. But I mean, there are some issues here with this stablecoin bill. And I think the net effect of this stablecoin bill is that you're going to make Tether and USDS way, way stronger.
Well, just to play it out, I mean, the only one that doesn't pass any yield back right now is Tether.
But Tether will start a new, and this was reported in Bloomberg, they will start a new stablecoin in the US for US users.
Right. So, USDT US, whatever it would be called. But I think that there is a question as to whether or not, if you can't pass back the 3.9%, can you pass back any yield from any stablecoin?
Tough for Circle.
Traders, AI enthusiasts, and degens, listen up. The game is changing, and Desk is leading the charge. To celebrate their launch, Desk is running a trading campaign with 3 major highlights. 38% of their token supply will be allocated to airdrops. They're offering the lowest trading fees on Earth, and finally, they will be running a Desk referral program. The more people you invite, the bigger your rewards will be. To get started, click the link in the show notes below and make sure to follow @TradeOnDesk. This episode is brought to you by Morpho. Morpho is the first and only DeFi protocol Coinbase has integrated directly into their main app, giving millions of users access to borrow against their Bitcoin on Coinbase. Just as Web 2 companies like Google, Amazon, and Meta were built on internet protocols, the largest financial companies of the future, such as Coinbase, will build on decentralized protocols like Morpho. Whether you're an individual, fund, fintech, or institution, Morpho is for you. Follow the link in today's show notes to try Morpho today.
What do you guys think? I know you mentioned that actually, Vance, you wrote a whole tweet about this, just about the IPO window being closed and, buckled down, essentially. I'm paraphrasing here, but do you get the sense that it's closed for a long period of time? I know I'm asking you to speculate about tariffs and whatnot here, so it's tough, but
I think it's closed for the time being, at least for the next 90 days, because they're not going to put it on the schedule just to pull it back. And I think also kind of the token launch window is similarly closed. And just so everybody knows this, and I see the low float, high FTV critiques on crypto Twitter from time to time. CoreWeave, the IPO went out, I think 2 weeks ago. Guess what percentage of float that has out? It has about 3%. This
is it really that low? Wow.
Yeah, this is how you launch public companies. You don't launch all the float on day one, and people advocating for let's just do no VCs, 100% up front. It's that doesn't work, and nobody does it for a reason, even in trad funds.
They're looking at the wrong thing. You're just looking at the wrong thing. If these were attractive assets, people would buy them. The problem is the assets aren't attractive.
Totally. Yes, exactly.
Yeah. So I completely disagree with this. This is one of those things that was not broken, right? This was just not a broken thing.
This is how everyone else does it.
Yeah. So I'm with you. Okay. So close for maybe 90 days here or something like that while there's still uncertainty around.
Which means that it's closed for probably half a year.
Half a year.
Yeah. You'll see more IPOs in Q3, Q4, but there's nothing coming for the time being. And I think everyone in crypto also realizes that. So yes, it is time to buckle down. And there's less capital, so it's time to kind of make things that have real product market fit.
Okay, speaking of that, something that people are very excited about is the idea of tokenized equities. So I think it was recently announced. Yeah.
We've tried this so many times. Tokenized debt is the thing that's going to really move the needle. Tokenized equities is just this pseudo retail narrative that people think we haven't tried, but if you don't think that we have tried that, you just have not been around for long enough to notice.
And why is it even that attractive? I don't really understand. I mean, how many people are really barred? I mean, I guess you could say people in China can't access U.S. equities, right?
And so, case in point, do you think that the SEC is going to allow just a free-flowing tokenized equity world to exist? No.
Right. Yeah, I know.
Synthetic Tesla is not going to exist on chain without some serious KYC checks and limitations on who can trade it.
Well, actually, tokenized base or tokenized coin is on base, and it trades at a $5 discount to the actual stock.
Yeah, that's not great. I think we were talking about
the only reason. Okay, but the only reason that they can do that is because Coinbase literally knows who you are.
Yeah, right. You're literally KYC'd. So, okay, what do you guys think about maybe last story we can cover here is there was an announcement actually this morning that kind of went under the radar. I'll share my screen here, but this is from some sort of automated U.S. corporate filings digest. But it's a partnership exploration in between TLGY Acquisition Corp and the Athena Foundation. So this is, to translate that is a SPAC that they're talking about.
SPAC City, we're coming back?
SPAC, we are so SPAC. Sorry, it's terrible. All right, so this is a non-binding LOI that was signed with the Athena Foundation to explore a potential partnership involving the acquisition of a validator business and the purchase of up to 100 million in ENA tokens at a discount.
Yep.
The partnership aims to support proof-of-stake services for the Athena ecosystem with terms to be finalized in a definitive agreement, yada, yada. This
is, okay, so broadly, the other thing that happened this week is Marco Santori announced the Kraken former chief legal officer, whatever. He announced that he has taken over. I can't remember the name of it. Maybe like Joinder, or there's some company that basically trades. He's basically turning this into a micro strategy for Solana. And on the announcement, it was up like 800, 900%. And yeah, and they're going to do the exact same thing. Look, what I think happens is, and there's rumors of like people starting the exact same thing for Ethereum and doing that. And
yeah, I've been hearing rumors.
It's the quintessential meme of the roller coaster that goes all the way up and then it comes like down and then down and then down, and it just like asymptotes towards zero. It's like everybody's going to try this with all the different types of assets. We're doing this for that. And some of them may get a bounce. Some of them may be worth more, as the case with whatever that company is with Marco, maybe worth more than what it was trading for before the announcement. But nobody's going to be able to touch Sailor and Strategy.
Do you guys know what that roller coaster is, by the way? You know why it's called the euthanasia coaster?
No.
It was a hypothetical design by some engineer or architect to how you would kill a roller coaster full of people.
Sick.
So it's actually called the euthanasia coaster. Yeah.
Perfect.
I mean, I'm just looking at TLGY, the Athena one. I mean, first of all, like Guy is really good at putting these deals together, and I think this is interesting, kind of no matter what. But this is a $114 million market cap company. Like these things are small, so you got to start somewhere. But like this will be a long road to like build this into something real.
Well, do you remember the company? This is maybe a couple weeks ago. The company that said that they're doing this is a publicly traded company. The company said that they're putting their entire balance sheet into ETH. It's a publicly traded company.
Who?
The market cap of the company was $6 million. I'm not even kidding.
I mean, look, like everyone is just looking for that like, liquidity portal that can take them 10x. And I honestly think the best one of this is like the rumor that we've heard is like Consensus goes public and runs the MicroStrategy playbook. Like they have real businesses. They've got MetaMask, they've got Infura, they've got like all these different kind of businesses. Like there is I think there's a real chance that works for ETH, but anything smaller than that is going to be tough.
Athena is going to be I've heard there's a slew of these things, like 15 or 20 similar, kind of tier 2 or tier 3. Not that Athena's great, it's just a smaller liquidity, right. Smaller market cap token, right? Yeah, it's just not. Guy has been pretty innovative on and pretty focused on getting TradFi exposure to ENA. So I think he put out a treatise maybe 2-3 months ago on the master plan for Athena. This was pre-Converge, the L1, the POA L1 that they announced, but there was something in there about creating SPVs which allow TradFi to get exposure to USDE. So his background is as he's a hedge fund guy, right? So he is like pretty good at putting together these legal structures and whatnot. So yeah.
Just to close the loop, it's called Cosmos Health. The market cap is now $8 million.
It's called Cosmos Health, and it's going all in on ETH.
It's on the NASDAQ. COSM.
Wow. Devastating for Adam. Oh, and you know what? Have you guys paid any attention to? I saw that IBC Eureka came out today. So IBC V2. There was historically, right? There have been all these startups to connect EVM chains with IBC. And I guess part of the reason for that, why that's been so difficult, is because the amount of handshakes that you need in between. They're basically like connectors in between the host chain and the receiver chain. They all just need to ensure that they're secure. So every single time there's like 10 different exchanges that needs to happen. This has reduced that to 3. And you actually saw, I think they're starting with it seems like they're focused on Bitcoin as an ecosystem. So they've got a partnership with Babylon, had their TGE and mainnet went live this week. And I think you've got Lombard LSTs, right, that you can transfer on IBC now. And you can also, I saw a native Atom ETH pool on Uniswap on Ethereum, which was cool. So yeah, maybe some rejuvenation from the hub. I really like the Skip guys, Barry and Mag. They're leading things over there now. So maybe some hope for optimism there. It'd be cool.
What else, fellas? Anything else? Did we miss anything?
We got a new SEC chair.
Yep, he just got confirmed today.
Wow.
Pretty
That's
awesome.
great.
It's official. We got some other notable stuff. Let's see if I can find it. Actually, Brandon on our team had a good tweet. DOJ ended its national cryptocurrency enforcement team.
Oh, yeah.
Treasury is reassessing blockchain regulations to boost innovation.
Oh, you know what was an interesting one? Ripple acquired Hidden Road
Yep.
for
I was gonna say,
1.25 billion. And yeah, it seems like they're diversifying away from the core business of selling XRP. No, just kidding. But it's an interesting play.
are you though?
Yeah, I mean, so one thing that was shocking to me actually is I guess Hidden Road has been quietly murdering it because they had $3 trillion pass through them last year. I mean, that is. Did you guys use them? I mean, that's maybe you can't say.
I don't use them, but we know a lot of people who do. They have an
Wow.
interesting business model of like they like so much of the problem of setting up like a trading fund is like building all your exchange connectors, building all your logic, building your paper trading system, building, your latency to be competitive, and then getting funding, and then like they offer that all in one, including like all your execution and all the, basically money that you would need to get started. And they either take a percentage of your trading volume or a percentage of your profits. It's like a very interesting business. And it going to Ripple is a bit weird, honestly.
The highest bidder.
So
Yeah.
I looked at it and I was like, this feels, I don't understand this, but once that $3 trillion dollars worth of trades that cleared through Hidden Road, then it makes sense, right? Like Ripple wants that on their ledger, right? I mean,
Exactly. Think about it this way. Ripple is a connective layer, right? In their markets, at least. And they connect all the financial institutions of the world, blah, 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 whatever their pitch is, which doesn't land. Hidden Road is a connection layer that's actually working and actually making a lot of money, I would imagine. I mean, I would imagine a $1.2 billion acquisition price. They're probably in the like tens of millions of dollars of revenue, if not over 100. And so I think, this is definitely, you can look at this from a Ripple taking the cash on the balance sheet that they have from selling XRP and turning that cash into something that generates basically an asset into a revenue line item.
Yeah.
Like, that's positive. It also is something that is probably aligned with at least the philosophy of what they're trying to do, how you're going to be able to plug like Ethereum transactions into, or like transfers into, something that lives on the Ripple consensus layer.
Yeah.
Makes zero sense to me, but maybe they'll try. And I would be worried that for people at Ripple or XRP holders, I'd be worried that you're going to try and do it and in the process kill the business of Hidden Road.
Exactly.
Let me ask you guys something. I actually have no idea. What are the specs of running a validator on Ripple? How decentralized is the network at this point? Dude, is that information?
Brad, be best friends with Brad.
You know what? Isn't it a pretty stunning comeback story though? A couple of years ago, think about Ripple or XRP making a comeback like this, and I'm not commenting on it one way or the other. It's just, it was highly unlikely, even going into 6 months ago. This was very unlikely.
I don't know how this is the case.
Look, this story is not over.
The story is definitely not over. I don't know how this is the case, but over Christmas and New Year's, I was with my family in Hawaii on vacation, and 3 independent times. This is post-election, kind of pre-craziness. 3 independent times, twice playing golf with random people.
Yeah.
I overheard conversations about XRP. I mean,
you guys been on TikTok? You guys been on crypto TikTok?
I don't have TikTok. I've never downloaded TikTok on my phone.
I have TikTok.
I downloaded it
on my phone.
I downloaded it for this, and I don't know, for whatever reason, everyone on TikTok talks about XRP.
But like literally golf guys who do not know anything about crypto or probably financial markets being like, I heard that Trump is going to say that you have no taxes on US denominated or US originated cryptos, and like XRP is the biggest, like it's going to $10. It's like, oh my God.
I think broadly we're getting to the point in crypto where it's like we're moving from a voting contest to a weighing contest. And look, like if you're like a $200 billion asset like Ripple is, you better hope that you have a fair bit of fundamentals behind you, because like there's just not enough buyers to keep that thing at that price for that long.
Yeah. Well, one thing that I do think, I mean, going back to this, open like the business models that get built around open source, I think one thing that has historically been kind of looked down on a little bit in crypto across all ecosystems, Bitcoin, Ethereum, definitely Cosmos, is this idea of BD and being like much more structured and intentional about that. And actually, all the Dino coins kind of have this advantage that this is what everyone gave them so much shit for so long, right? It's like a company, and actually, if you know who they always had, Ripple always had a really good brand with, was banks. If you talk to banks, like they always had a good relationship with.
It's because they were Google Ventures and Andreessen Horowitz backed, and you had like the button tie, Chris Larson and Brad Garlinghouse way back in the day. You had like, look, we actually know the team from way back in the day because it was, early San Francisco crypto in 2013, 2014 was Ripple, believe it or not. This is even like before the Ethereum white paper was launched. So long time ago. Oh yeah, long time ago. But things have changed, let's say. And they were the ones that first came out with a smart contract platform called Codius, and they were building all this open source technology, and like they would have developer hackathons and meetups, and like they were smart contracts way back in the day.
Joey Krug, right? Joey Krug.
They shifted. And you had Jed McCaleb, who was one of the co-founders. He like rage quit and sold all of his tokens overnight one time. And
really?
Yeah, or he announced.
Someone has got to do a book on these stories. That someone has got to compile all these, and
I got PTSD from being up in the forums at 4:00 in the morning. Like, what's going on?
I mean, literally, Ripple used to run their own exchange.
Yeah, Ripple Trade.
And you could lose your password for your wallet, and you'd like, you'd hit up customer support, and like Ripple's team would help you recover your coins. So
the shit that used to go on is insane. But
yeah, highly illegal.
Why do they have this status? It's because they were, professional. They were San Francisco. They were like, at the same time, you have the loose confederation of people that you call an organization at Ethereum trying to build open source technology when not a single person has an entire capitalistic bone in their body. That's like the two things that are going on in simultaneous. That obviously it's the one who has more business orientation who's going to work with the banks. Now, does that translate to real value? We'll see. But I think that we're also kind of like, maybe we started off like Ripple had a lot of, they moved in the direction that they did. Then Ethereum kind of took over as this decentralization theme, open source theme took over. I think kind of tying a lot of our conversations today together is like, we'll probably end up somewhere in the middle. Yep. Where you need to have a BD team. You need someone sales. You also need to understand open source and developer ecosystems and how to build platforms that people want to build on top of. We'll get some clarity around what's a token, what's a commodity security, whatever. But like, you got to have somewhere in the middle. You have to be a little bit more aggressive and a little bit more capitalistic. You can't just be a foundation.
They will come.
And you can't just be like a sales org, boiler room style, trying to cram, tokens down people's throats.
No, you cannot. No. That's all very healthy. I hope we are moving into the weighing mechanism phase of crypto. I think there are signs that we are. Maybe I think we are.
I mean, not maybe throwing out a wrench into the end of the conversation, but I do think that one of the conversations that Vance and I have been talking about is it a better business to be, basically selling DeFi or selling block space?
What do you think?
I think the industry is going through a transition from block space to DeFi. And, I think within DeFi, a lot of people are going through a transition of like, is it better to sell swaps or is it better to sell loans? If you're in the lending marketplace, is it better to be the stablecoin or is it better to be the marketplace?
Yeah.
Like there's multiple layers to this question, but I do think it follows from a point of view of, I would actually say it's even broader. You're either selling yourself as money, you're selling block space, or you're selling DeFi. And then under DeFi, there's all these kind of like sub themes, but like you kind of need to think through those first three first. And that's like what we're spending a lot of time doing right now. And as this week was unfolding, you know, we were buying the things that we thought would kind of be in this future paradigm. And so I think there's like actions to take, but everyone needs to think through this on their own, because like there are ramifications for the industry. And like in the case of Ripple, like what the fuck are you selling? The token? Like it's like some of these things are nowhere.
I think everyone has to like. No one really escapes this idea of having to generate some amount of whatever. Pick your REV fees. You have to. I think Bitcoin's the only one that gets away with not being able to do that. And so, yeah, I think the industry is. Sorry,
it's in the money camp.
Yeah.
Look, I put Bitcoin and stablecoins both in money.
Yeah, I would too. So yeah, I think that we're just gonna have to figure out. The industry's on the cusp of figuring that out, and I think we're gonna get there. But
fundamentals drives markets henceforward. Keep that in mind.
All right, fellas, I think we can call it here. This was a good one, and hopefully markets up by the end of next week. Or we didn't talk about Bill Ackman crashing out. Can we just acknowledge that was funny? That was a funny thing that happened this week, and
shout out Bill Ackman. Let us.
What I said is it's not a true bear market until Bill Ackman crashes out. So at least check that on the checklist.
Do you guys remember the Hell is Coming episode that he did on TV? I mean,
oh my God. Also, while he put on $2.7 billion of puts.
Yeah. That should not be allowed. That should, I know Novo got some heat for selling a little bit of Luna now, to be fair, like, look, you can't dump on people while you're getting a tattoo of Luna and saying to the moon. He only dumped 7.5% of his, whatever. I could kind of see it, but the Ackman thing seems worse than.
I think that the only argument that you have is single asset versus market.
Wait, did you say Novo only sold 7.5% of his Luna?
Yeah,
that's not true.
Oh, at that time, I guess at that time
on that day.
Yeah, maybe on that day. Yeah. I know they. Well, I heard rumors about how they maybe ended up that position, but yeah.
For another time.
For another time. Nothing confirmed. So, all right, fellas, that was a good one. Talk to you soon.
Later.